Please read this disclaimer before reading the full article below. Disclaimer: this content from Money Matters Smart MMS channel is for educational and informational purposes only and represents the author's personal opinions. It is not financial, investment, or trading advice, nor a recommendation to buy or sell any asset. Cryptocurrency and stock markets are highly volatile and involve risk. Readers should do their own research and consult a qualified financial professional before making any investment decisions. Any actions taken based on this content are at the reader's own risk.
Hello everyone, how's it going? Welcome to Money Matters Smart MMS channel.
The Fed's independence in crisis, Powell's probe, political pressure, and market turmoil. On January 11th to 12th, 2026, a seismic event rattled global financial markets and Washington policymakers. The U.S. Department of Justice, DOJ, opened a criminal investigation into Federal Reserve Chair Jerome Powell. The probe, rooted in controversy over a multi-billion-dollar renovation project at the Federal Reserve's Washington, D.C. headquarters, has sparked unprecedented debate about central bank independence, political pressure on monetary policy, investor confidence, and the broader economic outlook. What started as a legal inquiry into renovation cost disclosures has escalated into a broader confrontation between the executive branch and America's central bank, triggering panic in asset markets, safe haven surges, and sharp rhetoric from political leaders and Wall Street alike. The DOJ investigation into Jerome Powell, what happened? The Justice Department's investigation centers on whether Federal Reserve Chair Jerome Powell made misleading statements to Congress about a long-running renovation project for the central bank's headquarters buildings, a process whose total projected cost ballooned to roughly $2.5 billion. Critics have seized on cost overruns and differing figures as potential evidence of false testimony. On Sunday evening, Powell himself released a public statement, asserting that the grand jury subpoenas and threat of criminal charges are not genuinely about renovation disclosures, but rather a tactic to pressure the Fed into lowering interest rates in line with political demands. He recast the DOJ action as part of broader influence efforts by the Trump administration aimed at steering Federal Reserve monetary policy, which, by law, should be insulated from political control. Powell's core argument: this is about whether the Fed will be able to continue to set interest rates based on evidence and economic conditions, or whether instead monetary policy will be directed by political pressure or intimidation. Political context: Trump versus the Fed. The relationship between President Donald Trump and Powell has been tense for months. Trump has publicly criticized Powell's reluctance to enact aggressive interest rate cuts, labeling him ineffective and implying that lower rates were necessary to stimulate growth. That pressure has now spilled beyond rhetoric into potential legal action. Meanwhile, Trump has signaled that Powell will not be renominated when his chair term expires in May 2026, and that a successor will be chosen, with figures such as Kevin Hassett, Kevin Warsh, and Rick Rieder among the names discussed. The administration's broader approach has included attempts to remove other Federal Reserve officials, notably Governor Lisa Cook, with debates now before the Supreme Court regarding the extent of presidential authority to dismiss Fed governors. The U.S. Federal Reserve was designed to operate with substantial independence from direct political control, so it could make decisions based on macroeconomic fundamentals rather than political cycles. The statutes governing the Fed restrict presidential removal of officials to cases of cause, such as malfeasance or dereliction of duty, standards typically interpreted narrowly. Critics of the DOJ action argue that using criminal prosecution threats to influence monetary policy crosses a boundary that has long preserved the Fed's credibility and America's financial stability. Some Republican leaders have reacted strongly. Senator Tom Tillis stated he will block confirmations of any Fed nominees until the legal situation is resolved. While Democratic figures like Elizabeth Warren and Chuck Schumer have condemned the move as a dangerous encroachment on central bank autonomy. Market reaction, volatility, safe havens, and asset flows. Markets responded immediately and sharply to the unfolding news. 1. Equity markets slide. Stock index futures, including Dow Jones, S&P 500, and Nasdaq, declined ahead of the trading week, with traders pricing in increased uncertainty about economic policy and potential political interference in monetary decisions. 2. Gold and silver surge. Safe haven assets led the rally. Gold prices jumped to record highs, surpassing traditional ceilings as investors fled perceived risk. Silver also saw strong gains as global traders repositioned funds toward inflation hedges and assets less correlated with equities. 3. Dollar weakness. The U.S. dollar weakened against major currencies, reflecting concerns that political pressure on the Fed could undermine confidence in the world's premier reserve currency. This dynamic pushes international investors to diversify holdings into other currencies or commodities. 4. Yield curve and bonds. The yield curve experienced movements consistent with rising uncertainty, with some traders expecting policy adjustments and potential interest rate shifts in the future. Although movements varied, this signaled that fixed income markets were repricing risk across maturities. Public debt and economic fragility. Parallel to this political monetary standoff are concerns about soaring U.S. public debt, which has continued its upward trajectory past historic levels relative to GDP. While debates about borrowing and fiscal sustainability are not new, the combination of political strife and high debt has heightened investor anxiety. Large deficits amplify market sensitivity to policy signals because they influence expectations about future inflation, interest rates, and the government's ability to service its obligations. If markets begin to doubt fiscal discipline or question key institutions' independence, risk premiums on U.S. assets could widen, further complicating the economic picture. Why this matters: independence, credibility, and policy. A central bank's credibility rests on its ability to govern without fear or favor, a principle enshrined in policy frameworks across major economies. Central bank independence is believed to improve inflation control, long-term growth prospects, and market stability by insulating monetary decisions from short-term political considerations. Interference, or even the appearance of interference, raises risks such as undermine confidence in policymaking, leading investors to demand higher risk premiums, asset price distortions, as traders react to political news rather than economic data, weaker currency valuations, as confidence in monetary stability erodes, inflation unpredictability, if political pressures push toward accommodative policies when conditions do not warrant them. The DOJ's criminal probe, as Powell and others frame it, could represent a dangerous precedent where the threat of legal action is wielded as leverage in monetary policy debates. Global ramifications. U.S. monetary policy has international implications, given the dollar's role in global finance, cross-border capital flows, and international reserves. Questions about Fed independence reverberate through global markets, potentially affecting emerging market dollar liabilities, cross-border investment flows, currency valuations worldwide, commodity pricing dynamics, especially in gold and oil markets. Market participants in Europe, Asia, and elsewhere closely observe the situation, adjusting portfolios in response to shifting perceptions of U.S. economic leadership and institutional resilience. Looking ahead, what investors and policymakers will watch. As this situation evolves, the following developments will be critical to monitor. Legal proceedings. Whether the criminal investigation leads to charges, drops, or remains unresolved will influence confidence in federal governance and institutional boundaries. Fed leadership change. Who replaces Powell, and whether that successor maintains or alters the Fed's monetary path will be a central question in 2026. Fiscal policy decisions. With public debt and deficit concerns looming, fiscal choices in the near term may compound or mitigate the tensions affecting markets. Market behavior. Volatility measures, yield curves, currency indices, and commodity prices will reveal how investors price risk in a politically charged environment. Congressional actions. Lawmakers' responses, particularly regarding confirmations, oversight, and checks on executive authority, could shape the institutional framework for years to come. Conclusion. The unfolding clash between the U.S. Justice Department, President Trump's administration, and Federal Reserve Chair Jerome Powell has transcended a single legal inquiry. What began as an investigation tied to renovation disclosures has become a flashpoint for broader debates about the independence of central banking, the political pressures influencing economic policy, and the stability of financial markets. Markets have already responded in ways that reflect heightened uncertainty, from record gold prices and dollar weakness to stock volatility and bond repricing. At the same time, the political dimensions of the standoff reveal a deep schism over how monetary policy should be governed and who should decide its course. In the coming weeks and months, investors, policymakers, and global audiences will be watching closely. The outcome could either reinforce traditional economic safeguards, reaffirming institutional autonomy, or usher in a new era where monetary tools are shaped by political objectives. Either way, this episode will be studied for years as a defining moment in the interplay between politics, economics, and institutional independence. Thanks for listening and watching our channel, and please drop your thoughts in the comments below. And don't forget to like, subscribe to MMS channel, and hit that notification bell so you don't miss our next deep dive here on Money Matters Smart. Because in the world of money, staying smart is what truly matters.